Again, welcome on behalf of Solarplaza to this new webinar around the Polish market. Today we'll be touching a slightly different topic, not maybe so much related to project development, but we'll be touching on a topic of how to first of all finance your renewable energy project in Poland on a large-scale basis, and what are the tax aspects and implications related to that. As we'll see, they're pretty quite complicated in Poland. A short introduction. So today we'll have the presentation curated by Katarzyna Klimkiewicz-Deplano and Sławomir Patejk from Advicero Nexia, and then a final Q&A where you'll be able to send in your questions, and we will of course answer them. So please stay in touch, and let's make it an interactive one. A quick introduction for those of you that are new to Solarplaza. We've been now organizing quite some conferences and events around the solar industry worldwide, and we're based in Rotterdam, and this has been our core business since 2004, really connecting all PV professionals around the world. Not just that, since last year we also launched Solarplaza Consultancy, very active, especially in the Polish market, especially for those of you that are looking for your next business partner or project to scout or to invest in different markets across Europe. Some practical notes. Of course, we will be hosting the second edition of Solarplaza Summit Poland on May the 26th in Warsaw, where Katarzyna and Sławomir will also join us. Advicero Nexia is also a partner of the event, so plenty of topics from morning till evening. We also added the link to the conference at the bottom, and feel free to get in touch with me after this webinar if you want to learn more about it. As mentioned, some practical notes. First of all, feel free to send in your questions. We have a dedicated question box where you can send in doubts if you agree or disagree or want to learn more. If you have technical issues, luckily, there's not just me, but my colleague Tom is also here trying to help you out. If you have problems with audio or anything, we're here to help. And yes, we will make available the presentation slides and the recordings. Just give us, as always, 2-3 days to send them out via email. Now, I'll gladly introduce the speakers. So Katarzyna, welcome. We see you. Let's just quickly test the audio. We should be able to hear you. Let's make a quick test round.
Good afternoon. Hello.
Super. Thanks. Hello, Katarzyna. So Katarzyna is actually the managing partner, so founder of Advicero Nexia. As you can see, plenty years of experience, starting from Arthur Anderson to all major tax advising companies, and I would say with a special focus on in the last years also over renewables in the Polish sector for clients worldwide. And with Katarzyna joining us is also Sławomir Patejk. Hi, Sławomir, can you hear us?
Hello, yes, I can hear you. Hello, good afternoon.
Fantastic, great, Sławomir. Of course, well, I would say that the CV speaks for yourself. No need for long introductions here, but also Sławomir is a professional in the tax and the tax advisory services. So we'll start the webinar. I will leave the floor and the stage, Katarzyna, to you and Sławomir. Please feel free to send in your questions. Again, let's make it an interactive one, and we really hope you enjoyed this webinar.
Good afternoon once again. Thank you, Nicola, for a nice introduction. At today's webinar, we would like to guide you through some aspects, tax aspects related to investing in Poland in renewable energy projects. We will refer to both new projects that new investors would like to start having in Poland. We will also comment on the tax aspects related to continuing the investment in Poland. You already heard about myself and Sławomir's experience. Please let me just shortly introduce the company. We are the partners of Advicero Nexia. In Advicero, we provide several types of services. First of all, we provide a tax advisory service. within which we do due diligence advice, transactional advice, advice related to financial models for the project. We also have the department that is providing accounting services to those entities that are obliged to keeping the books, accounting books. We also have the department doing the payroll settlements, and we also provide the most crucial legal services that are necessary for companies acting in Poland. As Advicero Nexia, we are part of the global network Nexia International, which is the network of tax advisory and accounting companies. And within Nexia International, we work for our clients who wish to invest abroad, but also to clients who come to Poland from abroad. We have a lot of projects that we execute together with our colleagues from other Nexia offices. We invite you to follow our profile on LinkedIn. Also, if you wish to subscribe into our mailing list, doing that, you would be making sure that you are up to date when it comes to most important issues related to renewable market or most important issues related to general tax matters in Poland. What will we focus on during today's webinar? When you think about tax aspects of doing the renewable energy projects in Poland, including financing of those projects, you have a lot of matters to consider. We have chosen a couple of them, in our view, based on our experience and based on the questions that we usually and most frequently get from our clients. We have chosen the aspects that relate to financing of the projects, how to do it in the most tax effective way, and what actually conditions should be considered when choosing the way of financing to get to the best tax optimal result. The next point that we would like to discuss is related to the profit distribution and related to exit. Of course, whenever the investor enters the market, has still usually a couple of years until the exit is executed. However, it's very important to think about this exit already at the beginning, because the structure that we choose at the beginning usually have an impact on the exit taxation, but also on the ongoing profit distribution. We will also shortly summarize which types of tax items have the very significant impact on the project IRR, and if anything can be done in order to improve those items. It means to eliminate them, to minimize them as much as possible. And at the end, we will summarize our recommendations for the investors, what we do recommend to do and what we advise you to avoid. Now I will leave the floor to Sławomir.
Good afternoon once again to everybody. So in this first part of our presentation, we would like to present you a few aspects related to the financing of the project, and we will try to answer the question how to finance renewable energy sources project in Poland. And the answer, there's no clear answer, because there is no simple answer on this question. It depends what you would like to do in the future, whether you would like just to build the project and sell it at the beginning of the investment, or you would like to keep it for the long period. Whether you've got any idea about the financing, it's also important to know from what country the investor come, whether it's European Union country or another one, and so on and so on. Generally, there is two main types of the financing. Nothing new for investors. So the first one is as a debt financing via loans or credits, and the second type is, of course, financing of the investment via equity. What should be noted that in Poland there is a few types of equity. It's something I believe something new for foreign investors. That the equity could have different forms, and the way of increasing of this particular type of equity could have a significant impact on the financial model. As debt financing costs, there are of course treated all costs related to the loans, to the credits, capitalized interest, and so on and so on. And on this next slide, we present few selected tax aspects of each of the way of financing the project. In the first two lines, you see bank credit and loans, so the debt financing, and in the at the end of the table, you see equity financing. And in Poland, you can do it via share capital, so it is the most simple way, or you can also increase supplementary capital, so agio, so increasing of the equity with agio. And it's also possible to do so-called additional payments on equity, which is a kind of providing the funds by shareholders to the company. All of these types of equity and ways of related to increasing it has to be solved at the beginning of the investment, when you establish the company, when you buy the company, because these rules related to these possibilities should be indicated in the articles of association. And sometimes the clients, the investors wants to do something, but it's not possible according to the articles of association, and then we can figure out how the solution. In the first column, you see this TCLT abbreviation. It's Polish special tax, called tax on civil law transactions. It's a kind of transfer tax, or also it's due in case of particular transactions, civil transactions. And already in the first column, you can see that depending on the way which you choose, this tax could be either due or not. For instance, bank credits are exempt from this tax. In case of loans, generally it's due at the rate 0.5%. However, there is exemption available for shareholder loans. When the loan is granted by direct shareholder, then this tax is not due. And also there are also few another exemptions in case of loans granted, for instance, by foreign entities, when some special conditions are fulfilled. Regarding the equity, in case of increasing the equity via share capital or additional payments, this tax is due. There is no TCLT in case of agio. So this is maybe one of the solutions that the agio in Poland, this increasing of supplementary capital is pretty popular. However, another aspects has to be considered. The next one is withholding tax. I will in this presentation will present you a little bit more in this topic. At the beginning, I would like to say that this withholding tax in Poland, the standard rate, it's 20%, and as a rule, in case of interest payment, so as a rule, you have to pay it in case of when any interests are paid or capitalized to foreign entities. They are based on the double tax treaties concluded between Poland and particular country. It's possible to reduce this rate. In most cases, till 5-10%. In few cases, till 0. And we've got also some exemptions resulted from European Union directive when the loan, for instance, when the loan is granted by the direct shareholder, then generally the exemption, withholding tax exemption, is available with some with need of fulfillment of some additional conditions. In case of equity, there is no withholding tax if additional payments are returned to the shareholder. In case of share capital and or supplementary capital, in case of decreasing these types of equity, then the payment is treated as a rule as a dividend. So then the standard withholding tax rate is 19%. Regarding the tax deductibility of potential costs, so in case of bank credit or loans, as a rule, the interests are tax deductible. However, what you should to consider especially in case of loans, you have so the transfer pricing rules has to be observed in case of loans granted by the related entities, or it's also important to check what was the aim of the granting of the loan. Starting 2022, in case of loans granted for acquisition of shares in a Polish SPV, there is no tax deductibility of such interest. So this is the different situation when the shareholder takes loan for acquisition of shares, or when the SPV is taking a loan for the construction process. In capitalization restrictions, I would refer it in the next few slides. Generally, the fin capitalization restrictions are related to interest paid on credits, loans to related and unrelated entities. The exit. So how already from the beginning you should think about how the potential financing, what would be the impact in case of exit. So if I would grant the financing to the SPV, and then this financing would be kept in the company, what would be the impact in case of exit? So in case of bank credit or loan, assuming that this debt would be not repaid, then the impact is indirect, because then the purchase price for the SPV would be a little bit lower. In case of equity, when I acquire the company, when I establish the company and put the money as share capital or with or without AGO, then this amount would be treated as tax deductible at the moment of exit. However, in case of additional payments, these amounts, assuming that they were not returned to me, would be not tax deductible cost. Then in the last column, you see a few business remarks to this issue. I would just to mention because it is one of the most common question of the clients, whether it's easy to return back the funds. So in case of bank or of the loan, shareholder loan, it's pretty easy, because if the SPV has money, then it's possible to give it back to the shareholder. It's pretty easy do it in case of additional payments. However, in case of increasing equity as share capital or supplementary capital, then a lot of formal conditions has to be fulfilled, because such a decreasing of equity is treated as payment of dividend. Regarding the financial cost and tax shield, the first issue that should be mentioned is the tax rate in Poland. So standard corporate income tax rate in Poland is 19%. However, in case of so-called small entities with gross turnover below 2 million euros in a given year, then generally the 9% corporate income tax rate is available. In case of interest, only capitalized or paid interest could be tax deductible for the SPV, so no accrued interest. And what should be also considered, whether the interest could be treated as tax deductible directly or indirectly, in case that the loan was granted at the construction process, and the interest just increased the initial value of a given fixed asset. So then they are tax deductible, however, in the way of depreciation write-offs. In capitalization restrictions, this is restriction related to the deductibility of interest. And generally in Poland, based on the rules which are binding for the last few years, in case that the total annual debt financial cost is below 3 million zloty, then it could be fully tax deductible. What should be mentioned that this relates to interest on loans and credits granted by related and unrelated entities. In case that this amount is higher than 3 million Polish zloty, then we have to calculate EBITDA, and then we have to check, this is the second threshold, whether this 30% of EBITDA it's higher or lower of our total financial cost in a given year. In case that they are higher, then this surplus is not tax deductible in the given year. Potentially, it could be tax deductible in next few years. In case of PV investments, there is available potentially a special exemption from these thin capitalization restrictions. Because in the Polish corporate income tax, there is a provision that in case of public infrastructure investments, these restrictions are not applicable. And what is not maybe surprising, that the Polish tax authorities would try to say that private PV investment, it's not the public infrastructure investment, whereas the investors would like to say that it is. So the practical way is just to confirm this standpoint with a tax ruling, which most probably would be negative, and the investors has to go to the court, and maybe in few weeks there is a high chance that they will receive the official information and confirmation that the thin capitalization restrictions are not applicable. So practical tip: if you expect that your total debt financing cost would be higher than 3 million zloty, then it's advisable to go to for this tax ruling and go to the court and have this amount fully tax deductible. Regarding transfer pricing regulations, so this is generally based on the international law. And we've got safe harbor regulations. However, so everything what with a margin approximately 2% could be generally tax deductible. However, when we see the interest rates on the loans granted for the investment in PV, generally the interest rate is a little bit higher. So this means that the transfer pricing regulations and the benchmark studies has to be prepared. Okay, I think that now we can join to the second part of our presentation.
Yes, exactly. So now we will move to the topic related to taxation of the profit distributions and also of exit from the investment. So generally, this is usually a very important topic for the investors who think about preparing the first holding financing structure in Poland. And why? Because usually whenever the first holding structure is chosen, it's quite difficult or quite costly to change it later on. Therefore, it's very important to plan from the very beginning. Will we have a holding company for the project companies or not? If we will have the holding company, will it be a Polish company, or maybe we prefer for some reason to have it abroad. What legal form shall the project company and the holding company have? How do we see the cooperation with our partner, with a developing company, maybe with whom we have we are running the projects together? We have a joint venture. How shall we structure the flows of income, of profits between the joint venture partners? So all these are questions that shall be addressed at the very beginning. Because, as I have mentioned, they will result in higher or in lower, in more optimal or less optimal taxation of the cash flows. When it comes to the level of the project companies, it's quite common that and very popular that the project companies are structured in the form of limited liability company. In Polish, it's spółka z ograniczoną odpowiedzialnością. This is a very common form, legal form in Poland, because it's quite popular and very common. There are also basically no bigger doubts how to settle the revenues and costs of this company or the profit that is distributed. What we need to consider when thinking about choosing to have or not a holding company, we need to analyze which type of cash flows this holding company will receive. Typically, what is expected for the holding company is to receive interest from the financing that has been granted, and also dividends whenever there is already financial income in the project company that can be distributed. When we consider interest and dividends payments, what needs to be thought of is the beneficial ownership of the receiving company. There is less issue whenever the holding company receiving interest or dividends is a Polish company, because then we do not need to apply any withholding tax regulations. For interest, if it's received by a Polish company, it's treated generally as a regular revenue from business activity. For dividends, when they are paid from a Polish entity to another Polish entity, what we need to check is a few formal conditions that are related to the holding period. So to get the exemption, it is required that the holding period is at least 2 years, and this term of 2 years, it can be met after the profit distribution. And the second formal condition is the minimal holding of at least 10%. In case of exemption for dividends received by the shareholder, there is also an issue of beneficial ownership. It's also crucial in case of the Polish shareholder. However, it's much more crucial in case the shareholder in the Polish company is a foreign shareholder. So as you see on this slide, we have assumed that we have like a three-layer structure. We have the Polish project companies, which are held by Polish holding company, which is held by a German company, as an example. And now it is assumed that we will have, when it comes to profit distribution, dividends flown from the project companies in Poland to the Polish holding, and then further from the Polish holding to its German shareholder. And now looking at this flow between the Polish and the German holding company, in order to keep those dividends free of withholding taxation in Poland, we need to make sure that the German company has the status of beneficial owner. It's a pure tax concept, being the beneficial owner. It has been introduced in the agreements on the on the avoidance of the double taxation, but it has been also copied to the Polish local law. Actually, the definition of beneficial owner that we have in the Polish income tax law, in the local one, it's quite strict compared to the definition resulting from the international agreements. If the beneficial ownership status is not met, then theoretically we should have 19% of withholding in Poland, which means that the profit that is due to the shareholder shall be decreased by 19% of tax paid in Poland, which could be theoretically deducted from the tax that is to be paid on dividends abroad. However, the problem is that in most cases there's no tax on dividends received because some type of exemption can be applied. A similar rule related to beneficial ownership applies to interest payments. Whenever the interest payment is a cross-border payment, so the Polish holdco would pay to its German shareholder or another group company, then we shall have 20% of withholding tax on the interest, which can be decreased or can be the payment can be exempt if certain conditions are met. One of those conditions is having the beneficial ownership status. Quite often we talk with the investor, we speak with investors who want to enter the Polish market about this subject, which specifically company from the group shall be placed as the shareholder, as the foreign shareholder of the Polish companies. And very often the main criterion that is considered is what is actually the business activity of this foreign shareholder. Is this business activity so-called active? So is there a business going on and transactions, or is it a pure holding company? If it's a pure holding company, then usually we are in a search for another company in the group that actually would fulfill the condition of the beneficial owner, so that the payments made by Polish companies can benefit from withholding tax exemptions. Sometimes, whenever we have like a pure holding companies, and it has to be the foreign shareholder of the Polish holding, still we can achieve the withholding tax exemption, although in such a case it's not granted. It requires more effort, it requires more tax planning, some verification, upfront verification with tax authorities. So to conclude, having the foreign shareholder who is having pure holding function does not mean that we will definitely need to pay withholding tax in Poland. Exemption can be achieved, however, it's more difficult to get this exemption. When it comes to the exit scenarios, generally in Poland so far we didn't have something that is called participation exemption, which means at the moment of the sale of shares, either in a project companies or in a holding companies, we are talking here about Polish companies, there is a need to pay income tax on the capital gains obtained. The tax is a flat, it's a lump sum of 19% payable on the income calculated as revenue gained from sale of the shares less cost of acquisition of those shares. This was the status until the end of 21. As of the beginning of 22, there are new regulations in the Polish tax law, regulations related to so-called holding entities. And those regulations related to the holding entities, they apply to a situation where the Polish holdco would sell the shares of another Polish company or another foreign company. We are talking here about Polish renewable energy projects, so we shall focus here on the sale of shares in a Polish company. If this holding entity status can be applied to our Polish holdco, then the sale of shares in Polish project company could be entirely free of taxation in Poland. There are some formal conditions that shall be met to achieve that. They relate among other conditions, again, to the status of the holding company, of the selling company. Despite this being called a holding company, it must be an active company, which means it has to run so-called real business activity, and we verify if this real business activity is there based on the definition that is contained in the regulations about controlled foreign companies. What does it mean to have real business activity? It means to have the personnel that is employed in the company. It means to have assets that are in adequate scope and extent so that it's possible to run the business activity. Using those assets, it needs to have relevant technical equipment. It has to be managed by persons that are employed or otherwise formally engaged in the company. If all those conditions are met by the Polish holding company, then potentially the exemption on the sale of shares can be applied. In order to apply the exemption, the holding company shall notify the Polish tax authority in advance. As I mentioned, these regulations are new regulations in force from January this year, but definitely they are quite interesting and shall be considered in case of future exits. When we think about optimal taxation of the profits of the Polish companies, we need to mention, apart from the information about the rates that Sławomir mentioned, including the standard, the lower 9% income tax rate, also the alternative income taxation that is available in Poland. It's called Estonian CIT. Why is it called Estonian? Because this income tax regime has been introduced based on the income tax regime that is binding in Estonia and is already binding for years in that country. The concept of Estonian CIT is that the company, the corporation, does not pay income tax as long as the profits are not distributed. We are far from the concept of the accounted revenues. We rather focus on the revenues that are distributed, so income that is distributed to the shareholder. The companies that apply Estonian CIT, they are taxed with 15 or 25 income tax rate, depending on their status. The effective taxation, though, is much lower because then the tax due from the shareholders on the distribution on profits to them can be decreased by the tax paid already by the company on distribution. So effectively, quite interesting income tax rate can be achieved. The disadvantage of this system, or the weak point of this system, is that it cannot be used by all companies. Unfortunately, the catalog of entities that can apply Estonian CIT is limited to companies with so-called simple structure, which means that they have shareholders who are individuals and they don't hold shareholding in any other company. So whenever we have a company in Poland that has foreign entities as shareholders, unfortunately, Estonian CIT cannot be applied. So wrong direction, I don't know why. Okay. Another topic that I would like to shortly touch upon is the minimum income tax. This is also something new that is binding in the Polish law from January this year. On one hand, we have right now broad plans in the European Union about introduction of minimal income tax. However, this Polish minimal income tax that has been introduced this year is something else. It's based on different principles. The minimum income tax, corporate income tax, must be paid by those companies that have a loss, or if they have the share of income in revenues from the source other than capital gains lower than 1%. So if we have those companies, basically they are obliged to pay minimal income tax, which is paid based on the rate of 10%. The tax base for this tax is composed of 4 items. One item is 4% of revenues. So in short words, this minimal tax needs to be paid as 0.4% of all revenues of the company. The second item is the excess of financing costs paid to related companies over the amount of 30% of EBITDA. The third item is the excess of costs of intangible services paid to related companies over the sum of 5% of EBITDA plus 3 million Polish zloty. And the fourth item is some items of the deferred tax. There are some exemptions from this taxation, and I think the most important exemption for the project companies is the exemption for startups. So whenever we have a new company that is starting the activity in a given year, and also in 2 following years, in those years, so in total in 3 years, it's exempted from this minimum income tax. Also, some other exemptions are available. However, if you consider an acquisition of a project company that has been already existing for some years, and this company is still before the development process and is already disclosing some revenues, although the income share in those revenues is lower than 1%, then potentially this company might be liable to minimum income tax, which theoretically can be deducted from the regular tax within the consecutive 3 years. However, if this regular tax is not there, then the minimum tax remains as obligatory item to be paid to Polish tax authority. Let's switch to the next subject.
Now we would like to mention just selected types of potential tax burdens which investor has to face it. The first one is the withholding tax. So as we mentioned, the standard withholding tax rate in Poland is either 20 or 19%. And it concerns not only interest and dividends, as we said, but also all royalties and intangible services. So in case that Polish SPV, Polish holding company, pays any fees for management, for control, for the personal obtaining services, for guarantees, then such revenues are subject to the Polish withholding tax from the beginning. There is, of course, possibility to reduce or exempt these payments. However, you should be aware that some formal criteria has to be fulfilled, especially the criteria related to the beneficial owner test, because based on the Polish local regulations, only the revenues remuneration paid directly to the beneficial owner could benefit from the exemption or reduced withholding tax rate. So it's always problematic in case that such remuneration is received by any holding company. And also the last bullet point, we would like to mention that starting 2022, the new pay and refund withholding tax procedure has been implemented in Poland. It concerns all payments when the remuneration paid is above 2 million zloty. In such case, even if all conditions are fulfilled, in your opinion, for exemption, then as a rule, the withholding tax has to be paid to the Polish tax authorities, and only in the next step it could be applied for the refund of this paid withholding tax. So even pure interest paid to foreign investor or even dividend, if it's higher than 2 million zloty, then as a rule, this withholding tax should be collected and paid to the Polish tax office. It's two possibilities how to avoid this pay and refund procedure. The first one is so-called opinion in the application of this preference, and it's the situation when the Polish SPV in advance ask for request for special tax ruling, Polish tax authorities. So present all documents and so on, and then Polish tax authorities grants this preference for 3 years. Or the second possibility is that if in advance, before making of such payment exceeding 2 million Polish zloty, members of management board of the Polish company would personally sign a statement and sign it to the Polish tax authorities that all conditions are fulfilled. What is dangerous in case of this statement, that if tax authorities would state that any formal condition is not fulfilled, then these individuals, these members of management board of the Polish company, are liable for outstanding withholding tax. The next issue that we would like to just short mention is Polish real estate tax, which is which is not, I think, very untypical in case of such investments in other countries compared to other countries, because this is local tax which have you consider, and you pay this tax based on the due to the fact that you possess the land. This is approximately 1 zloty per square meter of land used for business purposes, and you pay this tax based on the gross tax value of the structures, which in case of PV investments are are foundations, land, building structures, piles, anchors, cables that are in the ground, internal roads, fences, transformer stations, some electronic equipment, and the tax rate is 2%. So if you consider that each year you have to pay 2% of the gross value of the part of your investments, it could be it is a significant burden in your investing plan. And concerning real estate tax, there's also the question regarding the plot, because when we've got the PV project, we know that there is some rows where the frames and panels are located, and there are some rows where nothing is located. And the question is whether hybrid use of such plots is possible, and whether the reduction of real estate tax is possible or not. Unfortunately, generally most of tax authorities say that when you've got a plot, then you have to pay this real estate tax on the whole plot, even if just a part of them is physically used for PV investment. So due to this fact that real estate tax is calculated on the value of fixed assets being structures, then it's pretty important to properly allocate the values from your construction contracts and another one to the particular fixed assets, because some of them are subject to real estate tax, some of them not. Regarding VAT rules, maybe just two information from you. The first one, that foreign investors are pretty often not aware about the split payment mechanism in Poland. This is shown on the bottom of this slide. It is a special system of payment of VAT in case that your contractor issued the invoice for you. Then depending on the products or services you acquire, you have to or you could pay this amount with split payment mechanism. In some cases it's obligatory, and then the VAT amount is paid on the special VAT account of your subcontractor, and this money are, to be honest, blocked in some way on this sub account. And the second issue which we would like to mention is that most probably in next year, in 2023, it would be a special regime related to the electronic invoices. And it means that all invoices issued by Polish VAT taxpayers would be in real time issued by servers of Polish Ministry of Finance, and a special connection has to be needed in order to avoid VAT frauds. Okay, so we can jump to the next point. Jump to the next point.
Yes, and just to summarize what to do, what we advise you not to do. So definitely before starting the investment, it's very important that the proper planning is prepared, consulting with the specialists. It's very important to put from the very beginning the desired holding structure, to plan the financing structure in the desired way. Of course, it is possible later on to add additional layers, to add additional holding companies, but you cannot be sure that it will be possible to do it without additional tax cost. Another very important point is preparing financial model that is consulted with the local specialists. Very often the investors are basing on the kind of universal financial models that they use for project in different countries of Europe or also outside Europe. Usually, it's not the optimal approach when it comes to the Polish investments. First of all, in Poland, there are some only Polish typical items that need to be considered. What we see usually is are the wrong assumptions with regard to the real estate tax burden. We see usually wrong assumptions with regard to deductibility of financial costs, and this has as a result wrong assumption when it comes to the effective burden of income tax. This is especially important considering what is happening in the Polish economy within the last months. If you consider that in Poland we don't have euro, we have Polish currency, then you have two additional items that needs to be analyzed. One is the foreign exchange rate, which one should be assumed in the financial model, considering the fluctuations in the past periods and the fluctuations that are foreseen for the next periods. And the second important issue is what type of the interest rate, so financial costs, should be assumed in the financial model. We have in Poland for the last months very high inflation rate. This is obviously pushing the interest rates. So it's very important to make the proper realistic assumptions here. Also, some other items that sometimes are omitted, like that withholding tax, which seems to be or makes this impression of being very theoretical tax item, although practically this can cut by almost 20% the profits that are to be distributed, and this is a huge amount. This is a huge share. When it comes to the projects that are considered for purchase, sometimes the projects are within companies that have already some years of history. It looks like the companies are not active. It looks like the investment expenses have been related to our specific project we are interested in have been incurred only within the last months or years. However, it's very important to have a look at the broader history, deeper history of the company. We need to remember that we have 5 years of prescription period in Poland, which means that the tax authority can verify backwards 5 years, practically quite often 6 years, can determine the outstanding tax liability, and who is responsible for paying those is the company, and practically the burden of those liabilities will be paid by the shareholder. What we also see quite often are the transfers, financial transfers that are made between related companies without any legal title. Usually they are made because it's comfortable, because one company has more free cash, the other not. It's very important not to do that. It costs a lot of money, and it can cost a lot of tax risks to properly settle after those transfers after they are made. So it's very important to plan it properly before, and to plan the liquidity of the company before any unauthorized transfers are made. This is all that we have prepared for you today. We are open to any questions that you might have, and we kindly thank you for your attention.
Yes, thank you very much. Thank you very much, Katarzyna Sławomir. We did feel to hear some questions. I say we will take probably the most relevant ones for the sake of time. Let's start with the first one. I think it's pretty interesting because it regards actually the area for the real estate tax. So previously, you did mention that most of the tax authorities calculate the whole area when applying the real estate tax. One of the attendees is asking us if this means that it depends randomly, or if a particular office or municipality calculates this, or is there a way to have a more beneficial outcome or approach when calculating the real estate tax here?
Oh, so in Poland, we've got 5,000 municipalities, and each of them is a little bit independent in this issue. However, the real estate tax is not calculated by the tax authorities, but it's reported by the entity. So considering this, and considering that the provisions are a little bit unclear, there is a small scope for reporting this, either the whole area or the part. However, it was a few years ago such situation that some of investors reported just a part of them. The minority of them reports the whole plots. And based on the court rulings, which was issued last years, we see that unfortunately, but the official standpoint of the courts is that the whole area should be reported. But it doesn't mean that if that in particular small local municipality, they will not accept this. So this is a little bit. It depends on the local authorities in practice. It could depend.
Okay, but it says general in the whole area. And another question is here, based on your experience, what is the responsiveness of the Polish taxing authority? I presume here the question relates to any kind of dispute transaction. I interpret it this way. Because it just asks what is the responsiveness. I assume it's in terms of time or dispute settlement here.
So what needs to be considered when it comes to this issue of responsiveness of Polish tax authorities is that in Poland, the dialogue of investor with tax authorities is totally different than, for example, in the Netherlands, in Germany. In Poland, the communication with tax authority is very, very formal. It's not possible to get any informal advice over a call or over an email. It's not possible to consult anything. It's not possible to negotiate anything. It's a bit like talking to a wall to tax authority, because what the taxpayer, what the company can do, can of course, based on the possibilities that are given by law, send relevant letters to tax authority, awaits for the response, and this response is usually given back within the legal deadlines. However, what needs to be remembered, it's not possible to ask and get an answer in terms to really run a type of conversation. We are quite often asked by our clients to arrange something with tax authority, to ask for something, to try to persuade tax authority. It's not possible to do that. It can be only done by sending letters, expressing your views in the letters. On the other hand, we don't have in Poland anything like formal verification plans of tax authorities, which means that it's not said that a given company will be verified, that the tax audit will be run, let's say at least every 3 years or at least every 5 years. It goes very randomly. So we have clients who have not been verified by tax authorities for 15 years, but we have also clients who get the tax audit every 2nd year. So this is also supporting what Sławomir has said, that sometimes some decisions are taken by the taxpayers when it comes to tax matters, and sometimes there will be no tax authority verifying it for years. But on the other hand, you can have another taxpayer who did the same tax optimization, and he will have the verification of tax authorities already the next year. So to answer this question, the responsiveness of tax authorities, it's within the legal limits, within the deadlines that are provided in the tax regulations. However, you cannot count on an active conversation with the tax authority in Poland.
Absolutely. And I would say let's address the last questions, which regards the share capital here. Questions here is if there's any crucial disadvantages when it comes to increasing the share capital, and I assume here it's the share capital of the operating company.
Mm-hmm. So disadvantage is that you have to pay this 0.5% TCLT. If you would do it with Agio, you will not pay this TCLT, and it's not so easy to refund this, to decrease this share capital and give back the money to the shareholder. The debt financing is much faster and much easier. So and also these additional payments to the equity could be returned if the SPV has money, then it could be done the next day without any tax burden. However, advantage is that if you would sell the company, then this increasing of share capital would be treated as tax deductible for the shareholder. In case of additional payments, it's not possible.
Absolutely. Okay. Katarzyna Słomir, I would say with the with the sake of time, we will ask also the attendees to, in case to address the questions separately. We also pulled up your contact details earlier, and of course, Katarzyna and Sławomir will also be attending Solarplaza Summit Warsaw on May the 26th. So, Katarzyna, Sławomir, allow me to thank you for being with us today. We went kind of very much in depth, I would say, on the topics. It was a real pleasure. So, thank you both. A reminder to those who are joining, of course, not just Poland, but you can also meet us at all the upcoming conferences that we're hosting. Here we mentioned France, Netherlands, and Spain. And indeed, most importantly and most relevant to today's presentation is Warsaw on May the 26th. So, Katarzyna Słomir, thanks again for being with us. And for those that join us, we advise you also to connect with Advicero separately for any kind of questions. And looking forward to hosting you soon again.
Thank you very much. Have a nice evening.
See you.